Since March of 2011, I said there would be another round. At that time, everyone said there won't be another round. By last fall, everybody said there will be another round. As of a couple months ago, there wasn't going to be another round. There has to be another round. And like I said, they're talking about it even maybe being announced tomorrow. Here's why. We've got to refinance almost $6 trillion of debt over the next 5 years. Plus, we're running $1.3 trillion, $1.4 trillion a year in deficits. We got to come up with $10 to $12 trillion over the next 5 years. Where's that coming from? The problem Europe has isn't the new borrowing, it's the refinancing all the stuff that's coming due, because you got to roll that debt over. Who has $12 trillion to give to us? Whole world economy is only what, 54, 60 trillion, somewhere in that range? Is the world really going to give us 20% of all their money just to cover our debt going forward? I don't think so. When we did QE2, the Fed was buying over 80% of all the treasuries that were issued. Japan's broke, they can't do anything. China was net selling, they're now net buying, but they're not buying anything like that kind of volume. And in fact, if we look at what's happened, private came in when everybody was scared back in 2008, 2009, nobody knew where to put their money. They bought a lot of our debt, a lot of our treasuries. They've fallen off the face of the earth. Foreign buyers are going down. The people buying the debt right now is us. We are buying our own debt. And in many cases, paying Goldman Sachs for the privilege, which is quite nice. It's a good business to be in. The reality is there's no one that has the money to buy the debt. We will have to continue to print money. We will have to keep the monopoly money going, but ultimately it will stop. What's going to happen when we do it? It'll be pretty much like last time. Stock, commodity, and bond prices are likely to go up from when it's announced to when it's completed. The dollar is going to continue to lose value. If we look at what's happened over the last 10 years, the dollar's lost about 40% of its value. People have lost real purchasing power. Again, they look at their account statements, they say, well, at least I'm pretty much even, I haven't lost anything. They've lost purchasing power. You got to learn to do things, and one of the big messages of all this is you want to do things not in US dollars. If we look at it in gold terms, if you say how many ounces of gold does it take to buy the Dow Jones Industrial Average? In 2002, it would take you 33 ounces of gold. By 2007, it would only take you 19 ounces of gold. The stocks had lost, compared to gold, about 40% of their value. Since 2007, right now, we're hovering right around 8. We've lost about 75 to 80% of the value of our stock holdings compared to gold. Whether you want to call it real money, whatever you want to do, that's purchasing power that's been lost. And again, the average person has no concept that that's going on, just like they didn't understand what was happening with real estate. When the dollar loses value, you can't sit it out. And this is why I say this is the most important skill. Putting your money in a mattress, putting it in a bank, a CD is not going to get it done. I think stocks are something you want to look at. Commodities, I think, are very important because the inflation is really going to help them. I wouldn't be in real estate. Even though inflation may drive real estate prices up, there's no liquidity. Okay? There's huge transaction costs to start with, but who am I going to sell to? By the way, you want to solve the real estate problem in this country? You've got a supply and demand problem. You got too many houses for the number of people. You can do one of two things. You can bulldoze houses, which destroys value and is stupid, or you increase demand. How do you do that? You don't have people you don't give people checks to stay in houses they can't afford. You increase immigration. Okay? What you say is if you come to this country, you buy a house at the current market price, you don't go on government assistance, and you make your payments for 5 years, I'll give you citizenship. Okay? It brings in productive people. If someone can make a house payment for 5 years, they're contributing something to society. They can't all be drug dealers. I guess maybe half of them. Okay? I mean, the reality is, I was in Australia for a while. Back then, if you had $250,000 cash monies, you could get citizenship. They wanted people coming in that had money that could invest. Same basic idea here. But could you ever get this through without being demagogued to death? Not a chance. Protect your big bucket, your IRAs and whatnot. Understand what's happening overseas, both multinationals and foreign nationals. What else? Stronger currencies. Currently, the Swiss government is artificially holding down the value of its currency. That never works. I don't know when it will break. At some point, it will break, and I would look at that. This is a biggie. Reserve currency status. How are we getting away with printing all this money? Well, part of it is because it's all supply and demand, okay? There is demand for dollars that's effectively an artificial demand. In 1944, in the Bretton Woods Agreement, we went off essentially the gold standard for the world, and we went on to a dollar standard. Transactions between countries now are going to be denominated in dollars. So if you were in Germany and you want to buy oil from Saudi Arabia, you got to get yourself some dollars. So people have to hold on to a certain amount of dollars just to do international commerce. But that's been eroding. 12 years ago, we were 71% of the world's excess currencies. We are currently about 60% of the world's excess currencies. China and Russia agreed in 2010 to no longer trade in dollars. They will use their own currencies. December of last year, China and Japan agreed to do the same thing. That has not yet been implemented, but that has been agreed to. A few months ago, China agreed that they were going to loan money to South Africa, India, and to Russia in yuan, not in dollars. You will notice a common thread here. China is taking the world off the dollar standard. I don't know what their political ambitions are. I don't know anything else. But if you want to beat the tar out of the United States without firing a shot, you take the world off the dollar standard. You'll crush the currency. It'll be devastating to this country. And you can do it all without firing a shot. And if I was going to hazard a guess as to a scenario, we're going to need $12 trillion. Even China doesn't have the $12 trillion. But we go to them and say, hey, help a brother out. Come on, give us $3-4 trillion. Say, all right, we can do that. Here's the price. We're going to become the world's reserve currency. And we'll transition over a period of 5 years, but that's what's going to happen. The president needs the money. He'll take the deal. Plus, there'll be a transition, so they won't blame him for it when it all goes south. But we will not be able to say no to that deal. And that is the problem with running the debt that we will have. We won't be able to say no. We can't say no to that. We can't say no to the austerity. Okay? Which leads me to ultimately conclude that I'm not sure we don't break up like the Soviet Union. I'm not sure that we survive all of this. And that is a scary thought, but yet another reason I would not be dependent on dollars. This is going to affect everybody in this country. In fact, it'll affect everybody in the world. But whether they think they need to be in the stock market or understand this stuff or not, they're going to get whacked by this. So now you also have an inflation problem. I have seen this graph a few places, but I'll show you something I've never seen before. What this is the balance sheet of the Federal Reserve. Going into the crisis of 2008, the Federal Reserve on its books had about $800 billion. QE1, QE2, the stimulus, all that stuff kicked us up to about $2.8 trillion. This is unprecedented, the amount of money that's come in. If we do a QE3, this could go to $3.5 trillion, go to $4 trillion. You could do a 5, you could do a 6 before the world catches on. Now here's what's brilliant about this. That looks bad. But I remember the speech that Greenspan gave back in 1999. And it was when we had the Y2K problem coming up. If you remember Y2K, the world was going to end. Computers were going to stop working, planes would fall out of the sky, there'd be no more physics, it was all going to be bad, right? Alan Greenspan gave a speech in which he said, the Federal Reserve is going to step in and throw some money in the economy to make sure that stuff didn't grind to a halt. And in fact, they were going to risk inflation by doing that. This is the money they put in for Y2K. It was about $50 billion, okay? 2001, 2 planes crash into the Twin Towers. It takes $1 trillion out of the economy. The Fed steps in with the money right here, about $30 billion. We are in a world we have never seen before. And again, this will have consequences. So coming to a basic discussion of inflation. You got more dollars chasing goods. Last year what the government told us is that prices went up 3%. The target's 2%, so we're 50% above, but everybody's okay with that. But it's all BS anyway. What they do is they say that 41% of your household budget, you spend it on housing, okay? And housing went up 1.9% last year. And you say, really? I thought housing was going down. Well, because they don't do housing like that. What they assume is everybody in the United States rents their house, okay? And then rents went up 1.9% last year. It's a totally fictitious made-up number. It has nothing to do with what the average person actually is spending on housing. Housing is actually down over the last 5 years. I'm going to come back to this idea. Here's the other piece of it. They say, well, the average person spends about $6 out of every 100 on recreation, which means everybody else is having more fun than I am. But that only went up 1% last year. So 47% of the CPI was growing at 2% or less, which means that everything else went up at 4.1% last year when you do the math. Gas was up 9.9%, Food was up 4.5%, apparel was up 4.6%. Here's the problem. You have deflation in the single largest asset that almost everybody owns. They're losing value here. Everything they have to go out and buy is costing them significantly more. The government's saying inflation isn't an issue, but when people are going to the store, they see that it's an issue. And this is where people are feeling a lot of pain. What they have in assets is going down in value, and what they have to buy is going up in price. This is really hurting people that are making 1.5% to 1.6% on their fixed investments, or 1% in a CD, whatever it may be. If you did the calculation the way you used to do it in 1980, last year inflation was over 10%. But we have changed the equation, one, to make it look like inflation is low so the Fed can keep interest rates low, and two, to keep down the Social Security cost of living adjustments. It makes things cheaper for the government. If China slows down, or if we ever start doing any better, inflation, right now one of the things saving us is there's just so much excess capacity. During this time, again, you don't want to be in cash. I don't like real estate for reasons we've talked about. I think fixed rate bonds are a sucker's bet. And I even think tips are a sucker's bet at this point, given how they calculate it. I think people can make a lot of money. They know what they're doing. Most people will not. Looking at it from this perspective, if we look on an annual basis, the orange line is inflation if you go places and eat things. The blue is if you don't go anywhere and you don't eat anything. And what they'll tell us is since 2000, basically inflation is less than 5% a year. How even at that, there's a cumulative effect. Prices are up if you go places and eat things by almost 35% over the last 12 years. How many people's stock portfolios are up 35%? How many housing prices are up 35%? How many people are earning 35% more? The reality is that most people have lost significant purchasing power. They hear inflation is 2 or 3%. It can't be a problem. Over the cumulative time, it's a huge problem. Lenin, and I won't get it exactly right, but this is close, he said inflation is the greatest way of confiscating wealth that a government has. It is a tax. It is a tax that is incredibly efficient, and as he put it, not one man in a million can ever see it. But this is a way that they're essentially confiscating wealth from you and I. So if you want to cut inflation down, what do? We're at this point going to have to pull a couple of trillion out, and by the time this is done, it might be $3, $4, or $5 trillion out of the economy, and that's going to take years. You have to increase interest rates, and you have to increase reserve requirements. This is going to keep our rates down of growth for years and decades to come. As the country starts growing, you have all this excess capital in there, you're going to have to find a way to suck it out. Now, you may go off a dollar standard, and you may actually start using another currency over here. I hate getting into the tinfoil hat, black helicopters crowd, but at some point that could happen. This, again, is the cost of not taking the hit today. We are only making the problem worse going forward. Deficits have to go up. Every 1% right now costs us an increase in interest rates. Every 1% costs us $150 billion a year. By 4 years from now, this number is going to be over $200 billion a year. You go back to 6% interest, once again, more than half of all your revenue is going just to pay interest on the debt. This will cause losses. China and Japan will both probably lose at least $300 billion on this, but nothing compared to what we're going to face. All right. At the end, it all goes back the other way, and you want to look at being short. Last couple ideas, and I'll let you guys go. From 2002 to 2008, the market was up 50%. It gave it all back in a year. This is why I said it's really important to understand how to use puts, how to go short. You will always make money faster to the short side than you will to the long side. Doesn't matter what you trade. Same thing is true of oil. 11 months up, 3.5 months to go back, because fear is a more powerful driver of human behavior than is greed. So what are the choices that the average person faces? The dollar is losing. It's going to continue to lose value. Sitting in cash is not going to be an option. Interest rates have to go up. Bond CDs, other fixed income instruments are not the answer. In fact, those people are going to get devastated. Don't know when that's going to happen, but it must happen. Real estate, I don't like the transaction costs. I don't like the liquidity. Especially, as we age as a society, who's going to be buying all those McMansions out there? Social Security, Medicare, prescription drugs, they're already functionally bankrupt. There's no way that 10 years from now they can be the way they are. I'm not even sure you can do 5 years from now. I think everyone has to actively learn to manage their assets. Or you can learn to say, do you want fries with that? Okay. If you remember back in the late 90s when everybody would quit their jobs to become day traders, And they made money because the market was going up. And it was easy. Everybody, it was the greatest thing in the world. Then the market went down, they got wiped out, they had no idea what to do, and they had to go back and try to find a job. Once you get to be my age, you're in your 50s or older, and you're trying to find a job, especially with what we're doing in this economy, which is not going to be any of the right stuff, we're not going to significantly cut taxes or regulation. Okay, we can go to a 25% corporate rate. That's not going to matter in the long run. Okay, you got to get rid of it. You got to get rid of the regulations. There's a lot of stuff you can do. The best advice I can give the vast majority of people out there is, if you're not going to learn to do this, no matter what you do, hang on to your job. Okay, because it's going to be way easier to hang on to that job than it is going to be to go out and find a new one. What else does it mean? There's going to be periods of inflation, deflation, the dollar losing value, not just down, but volatility. But when you're long, buy the insurance. Like Tom was talking about earlier, you know, I had the $50 stock and watched it go to zero because he didn't believe the guy that told him he should buy some puts on it. Beware of what's happening this fall, and you're going to have to get rid of the old bull market bias. Buy and hope, dollar cost averaging, buying on the dips does not work in a volatile market. It only works in an up market. Up markets are rare and will become rarer. You're going to have to be long and short, again, selling short and puts, especially in individual retirement accounts. Last thoughts. Don't, and if I can get one message across, if you lost money on your house, don't let that happen to your portfolio. You could have protected that money in the house, but most people didn't understand how. Understand, learn how to use options to protect your portfolios. You can use it to protect IRAs and 401ks as well. Your trading bucket as well as your wealth bucket. Use leverage. Make your money work as hard for you as possible, but as we talked about earlier as well, probability, risk, then leverage. Options, futures, Forex will all do it. To me, the reason I'm an options trader is I can get protection as well as leverage. You're not going to be able to sit it out. The world isn't going to let you. What you own will lose value in real terms if you try to sit it out. And I really believe this is a generational opportunity for people. Just like in the 1930s, there were vast numbers there was vast amounts of wealth created because it was a change in the social order. That is coming as well. And people can take advantage of it, or people can become victims. And unfortunately, the vast majority of people can end up on the wrong side of it. And I will also say this, something I've said to business owners for years when I've kind of laid these scenarios out. And when you talk to business owners, they understand that there are very real problems, can't always articulate them. But one of the things I would say to them is, I could be wrong about all this, okay? But if you do these things, and I'm wrong, you still come out of it okay. If I'm right about even the majority of this, and you try to ignore it, and you think it's not going to happen to you, you're totally host, okay? And this just becomes kind of the classic type 1 and type 2 error. What are you going to bet on? And the way I would say it to them is, are you willing to bet everything you own that I'm wrong? Because I have spent years going through this. I don't know how it all ends. Again, I don't know if you break up. I don't know if people secede. I don't know if there's insurrection in the streets. I mean, you think about this. The day we tell all these people they're not going to get their Medicare, their Social Security, all the rest of this stuff, we have 300 and some million people in this country. 1% is over 3 million people. 3 million people can raise a lot of hell. Okay, what are we all just going to sit and go, oh, it's okay, don't worry about it, it's all going to be good? Okay, I don't think so. What you've seen in like Ohio and Wisconsin, all right, where people getting up in arms because we promised them things. Listen, I come from, I've spent my time in unions in the day. We had a deal, okay? You told me you were going to do this for me as long as I did this. I did this. Now all of a sudden you're changing my deal. Would I be hacked off? Yeah, I'd be hacked off. Now, the reality is we don't have the money to fulfill the deal because the government was promising money that it didn't have. Ohio, Wisconsin, various states have to do what they do. But what are we going to do the day we have to bail out California? Okay? One day the government is going to have to bail out California, Illinois, Nevada, I don't know which one first. And what's going to happen, my guess is, whoever the personalities are at the time, you're going to get your Rush Limbaugh, Sean Hannity, Fox News, whoever it is. They're going to find some woman in California who's a retired school teacher, on disability, working for a union, pulling in about $300,000 a year in taxpayer money. She is going to be the welfare queen in a Cadillac of our day and everything that's wrong with the system. New York Times, NPR, MSNBC, whoever's on the other side, they're going to find some school teacher in Illinois, 40 years old, who has 23 children with Down syndrome. Okay? If she doesn't get her pension, these kids are all going to starve. And there are going to be these battling anecdotes. And a bunch of people in the middle of the country are going to go, what on earth are we doing bailing out these people in California? But we will bail them out because we will have no choice, because no politician is going to give up all of those votes. That party would be toast. That, I unfortunately think, is what's coming. And actually you started to see this a little bit. The woman collecting unemployment and welfare after she won the lottery and doing that for a year, people got a little bit upset by that. There were some people in Seattle that were collecting all kinds of government benefits, living in this multi-million-dollar condo on Lake Washington. There is a lot of abuse in the system, and there is going to be a lot of anger. And the other part of this is, if you go back to the road to serfdom, one of the points that Hayek makes is that the smaller the community, the larger your government can be, because there's a commonality of interest. You have a family, you have a small community, everybody's pretty homogenous, it's all fine. The bigger you get, the smaller government must be, because the larger government is going to always be giving favors to one side versus the other side. One group of people is always going to be resentful. If you look at what's happening in this country, when Bush and the Republicans were in control, half the country was hacked off. When Obama and the Democrats were in control, the other half of the country was hacked off. Because government, when it has that much power, you have to suck up to government. You have to ask them for favors. And it pits one group against another group. I have lived in San Francisco, and I've lived in the middle of nowhere in Colorado. Those two places have nothing in common. Are we even really one country anymore? These, unfortunately, I think, are the conversations that I think we're going to have going forward. And I'm not sure what all of those answers are going to be, but this is not going to go smoothly. And you get into then, what do you do at the end of the day? And you can kind of take two roads. You can try to go out and lead the revolution, and if you're there, I wish you the best. Or you do as Voltaire said, and you go out and you cultivate your own garden. You find a way that you can get through this yourself, your family, whatever. You do the best you can. But quite frankly, trying to take on this system right now, I don't know how you do it. I think you're tilting at windmills. I just don't know where the answer is. Because what we've just talked about here, there's a lot of people in politics who understand these issues, and there's nobody talking about it. Because again, that will only cost them their power.